Hello traders, and welcome back to another video. Thunderbolt here, and this is another week of success. It has been another week of successful trading, and as we head out to another trading week, I'd like to invite you guys to watch this weekly outlook video again. If you watched the previous video, the one that we did last week on the weekly outlook, and if you go back and look at the charts, you'll see that it was a very successful week. Okay, so the market respected all our analysis on the dollar, on EUGU, and on gold. Okay, if I can go to gold. Okay, so it has been really successful. As if you look at the last video, you'll see we had sales. Okay, as we had predicted. On GU, we had sales again. So the whole idea was if we violate this, then we buy all the way to this and sell. But if this holds, we sell to target the previous weekly low. Okay, and you can see all our objectives were met. So without further ado, let's get straight into this week's weekly outlook analysis. So as usual, we start on the DXY, that is on the dollar. Okay, so let's get on the dollar. And when we're coming into new week, we always want to start on the weekly time frame. All right, so this is the weekly time frame, and you can see how last week's candle closed. You can see we were very bullish. All right, so we took out this low over here. This low, we've always talked about it. Okay, so we've always talked about this low because this was the last sell side that was taken, and now we're heading for buy side. Okay, so we already took out this high over here last week. Okay, now any buys we take above this high over here are usually very low probability. Okay, why? Because we've already taken out buy side, and we can always anticipate for a retracement probably into internal range. Okay, but because of the way we've closed over here, our next drawn liquidity will potentially be this. All right, so we retain our bullish bias. Okay, and all this becomes potential liquidity that we could always come and target. But in the meantime, if we don't go straight for this drawn liquidity, I can always expect the market to come back to this fair value gap over here, which also doubles down as a BPR. Okay, but we also have this breaker block as well that lines up with this BPR. Okay, so it is a very powerful zone. This is a very strong zone that we can always expect to hold. Okay, so there's really not much to analyze. Okay, so either expand bullish, or when the week opens, all right, or when the week opens, we take out the previous weekly high and we start our retracement lower. Okay, so if we open low, okay, if we open low, we can always expect the candle to expand because it will be an open low, high close candle. Okay, so depending on how the week opens, this is where we always want to wait for to see how the week opens. But let's go to the daily time frame so that you can get a bit more information. If you watch last week's video, okay, we anticipated that after taking out this high, we'll come back to this fair value gap. Okay, so it doesn't look like we actually came back into the fair value gap, but if you actually look at either EU or GU, I can't remember quite well, we had an SMT over here, which means the other asset manipulated, so we didn't have to actually manipulate on this. Okay, and then headed out to take out this drawn liquidity as we had actually anticipated. Okay, so same thing we'll actually be looking at. Now that we've taken out this drawn liquidity, we can always expect to have a retracement. All right, so on the weekly time frame, this is a fair value gap that was left on the weekly time frame. Now if you come to the daily, it looks like we already came into that fair value gap. So at this point, I'd still expect this to be liquidity. Okay, because it is an open imbalance on the weekly time frame. So the daily time frame actually provides, or these failure swings actually become inducement. All right. So in case we don't, we can always expect other levels on the daily time frame to actually hold like this, because now this becomes our new range. Okay. So either way, because this is a daily time frame, if the market decides to react from this, okay, or the market comes to this, either way, we'll always have intraday opportunities to always trade. But for now, if the market, especially on Monday, leaves a swing point at the top, I can always expect to trade the market, the retracement lower, and follow the order flow on the 1 hour time frame until we either come to this volume imbalance over here, or either this fair value gap or this. Okay. And I can always trade higher or trade lower depending on how we react at this point. All right. So either way, we retain our bullish bias. So either we do something like this, okay, or the market comes all the way here, okay, and we can always look for opportunities. Sorry. So either come higher to that point, or we come to this fair value gap. All these will be based on confirmations that we can find, and we just don't trade any of these zones blindly. Back to, let's look at GU. GU on the weekly. Let's see what we have on the weekly. You can see, first of all, buy side was taken at this point, same as on DXY. Okay. We took out this low, and you can see with the type of candle that we actually close with. Okay. This is a very high momentum candle, same as on DXY. So if you look at DXY, you can see this really bullish candle is the same bearish candle, momentum candle that we have on GU. Okay, so on GU, last week we had this reaction, but remember we still closed below the low of the previous weekly candle low. So in as much as we had this really huge reaction, it was really difficult to frame a weekly profile bias, either bullish or bearish, based on this candle. Okay, so most people are arguing bullish because of this rejection, but we closed below the previous weekly low. And not within it, so it was really difficult to frame a bias. So either way, my bias was, if we trade bullish, we want to trade with confirmations based on the arrays that we had on the 1 hour. So we had two fair value gaps, and we had to wait for confirmation, and we got one confirmation from one fair value gap, which we were able to frame our trades lower. So based on this candle, we can always anticipate where the market will go. So now this becomes our drawn liquidity, this extreme low. But now, after the market expands like this, we always want to anticipate the next phase of price. Okay, so we either have a retracement lower. Okay, we either enter a consolidation into an expansion, or we have an expansion into an expansion. Okay, so either way, the price starts with expansion and ends with expansion. Now after this expansion, we can always expect price to enter the next phase of price, especially after we've taken out this drawn liquidity. Okay, so same thing, we'll want to wait to see how the market actually opens next week. But one thing is for sure, if we open high, we'll still expect trades lower, because it will be an open high, low close candle, and either way the direction is lower. Okay, so continue to look for sells on GU, as long as we are looking for buys on DXY. Okay, so you can see we don't have any open imbalances on GU. Well, we have a really tiny one over here. Okay, but it is really small. So we'll still have to wait and see if the market wants to come back to this fair value gap over here. So this is subject to waiting. We'll see, but it is a bit too far, so I'd wait to see. On the daily time frame, let's come to the daily. And you can see this fair value gap is also on the weekly, also lines up with that daily fair value gap that has still been left open. that has inducement. Okay, so you can see there's liquidity just below it. Okay, so that forms a very high probability fair value gap array to trade from. But you can see we already have a new dealing range. All right, so market came into this fair value gap over here. So we have another fair value gap over there that the market actually came back to, and we also rejected from, and we actually even broke structure. Okay, so we had a break of structure over there. Sawa. So which means this is our new dealing range, right? And what else do we have? We have this as sell side taken. Okay, so we can expect the next phase of price, which is a retracement. Okay, so this is an open fair value gap that has actually been left on the daily inside this new dealing range, and it is actually in premium. So we'd expect the market to actually trade higher. Now, depending on how the market actually opens, if we open and take out this low on Monday and close as a C2 candle, as a C2 closure with a swing point at this point, now I'd expect Monday to be the low of the week and actually trade higher into this fair value gap. So I'd expect probably next week to be a retracement week into this fair value gap, and then probably the other week we could always trade lower to target this liquidity. So if the market opens straight into this fair value gap, we could always expect to form the high of the week at this fair value gap and then trade lower to take out this liquidity, all right, or the swing point that will form, and potentially lower. Okay, so depending on how the week actually opens, we'll wait to see, but I'd expect the market to trade into this imbalance to target this as our drawn liquidity. All right. So again, after the market expands like this, always expect the next phase of price. All right. And if you guys need me to make a video on the phases of price, kindly let me know in the comment section and we'll do. Right. Let's look at EU. That was GU. Again, we start on the weekly time frame. Again, you can see last week we had a really successful week. All right, very successful. So based on the weekly outlook that we did, so let's look at this as well and see. Again, same thing on EU, buy side taken, and you can see buy side is liquidity is always something that I really want to follow. Okay, so this was taken as well on EU. Okay, and unlike GU and DXY, you can see this was also taken. All right, so this is the low of 3rd November. Let's see. So you can see we're still waiting for the low of 3rd November to actually get taken out, but it was taken out on EU. So EU, we're still expecting this low to go, which is the low of 28th July. Let's see. This is the low of actually 28th July is not. So there was SMT with EU. So this was SMT at one point. Okay. With EU. So you can see that was sort of SMT. Okay. So now we just have to wait and see now, because this low has already been, you can see EU was a bit weaker. So you can see this low has already been taken out on EU. All right, but you can always look at this low to always get taken out, especially because of how it closed. Okay, or if it will be a case of SMT, we'll just have to wait and see. Now that this low has not been taken out, and this has actually been taken out on EU. Okay, so we'll wait and see if it is a case of SMT. All right, we'll just have to wait, but we still retain our bias. Okay, now that this low has been taken out, again, we can always expect the next phase of price. So on the weekly, like on EU on the weekly, like on DXY, we left an open imbalance on the weekly time frame. So we can always expect the market to come back to this as internal range liquidity now that we've already taken out external range. Okay, let's look at the daily and see if we have anything. Now, on the daily time frame, we have a new dealing range. Okay, so the market actually came back to this fair value gap over here, and we took some bit of structural liquidity. Okay, and actually sold. So we can look at this as our new dealing range to continue lower. or if the market decides to come back to this weekly fair value gap, okay, then this will also, or this will be liquidity. Okay, we'd expect to see this high get taken out. All right, but now coming into next week, that is more of a long-term outlook. Now coming into next week, we'll want to see, now that we've already taken out sell side, you can always expect again the market to come back into internal range liquidity. And what you can see on the daily time frame is we have all these imbalances. Okay, so we have this imbalance in this new range that you're actually trading. So this is one fair value gap, two fair value gap. Sometimes I like to mark them both as a chain fair value gap. Okay, but now since this fair value gap is really huge, I'll want to see some sort of liquidity sweep inside this fair value gap on the H1 and potentially an SMT. Okay, so for the guys who don't know what SMT is, so SMT basically is if one asset, a correlated asset, if this is EU, okay, so assuming EU takes out a high, okay, I will expect GU inside of this fair value gap. So if GU also has a fair value gap, all right, that was left on the H1. So this fair value gap on the H1, or if also the market doesn't reach this fair value gap, but basically, if you're looking at assuming this high over here, which is also the same as on EU, okay, I'll want to see if this high is taken out on EU. I'll want to see the same high not get taken out on GU. Okay, so the market do something like this, and this is SMT. Okay, so SMT is always an indication of institutional involvement. So we call it a smart money reversal. So I'll want to see SMR inside of this zone to confirm a reversal. Okay, but coming into the week, I'll expect the week to first take out previous daily low, potentially on a Monday or on a Tuesday. Okay, so that we can have the confidence that we are actually now trading back into the next phase of price, which is a retracement, okay, into internal range, and then we can always target. But in case the market opens higher into this fair value gap over here, then I'll expect the high of the week to actually form inside here to continue lower, to target this low, and potentially the low of this is the low of 28th of July, which I think was 28th of July, the week of 28th of July, this low. Okay, so this will be our ultimate draw on liquidity. So you see, there's nothing actually much to talk about, especially because of the kind of move that we had next week. So next week will kind of be a week to observe price and see what the market actually does. But basically, we want to see two things: either retracement or expansion lower. Okay, so if the market opens low, takes out previous daily low, and closes inside the range, then we'll be looking for buys all the way until here. But if the market opens and fails to take out the previous daily low and continues higher, then we'll expect them probably the week high of the week to form inside of here and then trade lower. Okay, but the market can also decide to consolidate, especially after this long expansion. So if the next week closes as an inside candle, then it will be really easy to trade, because we'll just wait for a sweep of the range high to target now the range low as liquidity. Okay, so basically that's what we have on DXY and the majors, that is EU and GU. We can look at gold. Let's see what we have on gold on the weekly time frame again. So you can see the type of price action that we had on the weekly time frame. Okay, so previous week we had this swing point form. Okay, so I was expecting prices lower. Again, people were still expecting bullish price action, especially after we took out this low. So guys were expecting that we take out the all-time high. Okay, so I'll still expect the all-time high to get taken out at one point. It will just be a matter of waiting. Okay, so last week closed pretty bearish, but still closed inside the range of the previous week. So that is the week of 2nd March. So there are a few things to still expect. First, I want to see this previous weekly low taken out. Okay, so I'll expect an open high low close candle to potentially continue trading bearish. But if the market opens, takes out the previous weekly low and retraces, then I'll expect an open low high close candle. Okay, so I'll expect a bullish week, but all that we'll be able to see in the daily, on the daily time frame. Okay, so this is the daily time frame that we have. So previous weekly low still left intact. Okay, so from the last weekly outlook video, this was always my ultimate drawn liquidity. Okay, so and the basis of my bearish bias was always because of this drive that we had here, this bearish drive. So you can see we had a very bearish expansion, and if the market wanted to move bullish, I'd still want to see the same amount of momentum that we traded lower with, trade higher. But you can see this is a very choppy retracement, okay, which means the market is actually building a lot of sell side at the bottom, okay, that the market could always target. So you can see the market came back to some sort of supply zone over here, okay, and you're having sort of a retracement. So you can still look at this as your change in state over here, okay. We left this CB over here, this outside imbalance, okay, that you can see actually held price, right? So I was looking for this high to get taken out so that you can continue trading lower, which you can see happened on Tuesday. So Tuesday was the high of the week, and you can see we continued trading lower, okay? Hence the reason for my bearish bias. So this is still my drawn liquidity. So depending on how the week actually closes, we have an internal range over here, which I'll expect to get taken out. To come and get filled, immediately we take out this if you're actually going to continue trading lower. Okay, so depending on how the week opens, if the week opens higher, I'll expect the market to actually trade to this fair value gap over here, take out the previous daily high, okay, something like this, and then trade lower. Okay, if the market opens on Monday and takes out the previous daily low and also takes out our drawn liquidity, okay, so if the market takes out this low over here, trades lower, takes out our drawn liquidity, and closes inside of this range, then I'll expect more buys into this internal range and then continue trading lower. Okay, so either way, I want to see the market trade lower. Though still, I believe we had SMT on this fair value gap over here. I believe we had SMT over here. If we look at this is Friday, no, Thursday. Let's see, XAU. So you can see XAU Euro is still a bit far from our drawn liquidity. Okay, so I'll still expect the market to continue trading low as long as XAU Euro has not, or we could also still have a case of SMT to continue higher. So now that will depend. If we take out this low over here and the market is interested in moving bullish, we also want to see SMT with XAU Euro. Okay, but in this case, no SMT. But in this case, what we want to see is either we take out this, okay, take out this into this, trade lower, okay, or if the market now wants to proceed bullish to take out the all-time high, take out this and then wait to see if this daily bearish imbalance fails, okay, and then you can continue trading higher, okay, with this as our first drawn liquidity and then the all-time high potentially. All right, so it is just a matter of waiting, okay, but if we take out, because this liquidity is easier to get taken out than this is a bit closer, okay, so I'll expect something like this. We take out this, trade higher, form the high of the week at this point, and then continue trading lower, which means if Monday we have a bearish swing point at this point, we could always look for buys maybe on Tuesday and Wednesday and expect the high of the week to form here on Thursday, potentially have a trade on Friday and the other week coming. Okay, so all this is just a matter of waiting, but in case anything develops, we'll send it to our Discord. All right, which is something that we've actually been having. So this is our Discord over here, and you can see all the trades that I've been having have actually been sent over here. Okay, which is this is an example. So you can see at this point we had this high not taken on XAUUSD, and I was asking if that is SMT, a matter of waiting. So this is gold euro. Okay, you can see the same high not taken on XAUUSD. Okay. More analysis. So saying what I want to see, and potentially this is what I was taking. Buy side taken, target sell side liquidity, and you can see that is what happened on the market. Okay. Another thing we sent. Okay. We had SMT with XA euro inside of this fair value gap, which is something I always want to see for smart money reversal to confirm sell side. Okay. Something else that I shared, what I wanted to see on gold. Okay. Price come into this fair value gap. All right. Especially after we had this really huge range, I was expecting probably the next phase of price. So I was expecting this to close as an inside bar. And then next week, either take out the high of the range into this fair value gap and trade lower. But that's not what happened. Actually, this high was taken out on XA Euro, which left SMT on the H1 on gold. Okay. And then this is the ultimate drawn liquidity, which we have not taken out yet, but I'm expecting to actually get taken out on Friday. Okay, so this is H1. You can see inside of that daily fair value gap that I was talking about. Okay, and what I was telling them is I want to see a swing failure pattern. Okay, so I want to see the high of this taken out, this H1 high. Okay, into the FVG would be amazing. So SMT plus CSD or MSS would be ideal to confirm smart money reversal. Okay, so check XAU euro or silver for SMT. Okay, so you can see same thing happened. We have SMT with XAU euro and actually traded lower. We actually continued lower, almost taking out this strong liquidity. Okay, so all these things we actually send to the community, and you can see everything else is sent before it actually happens. Okay, so I was expecting the market to retest sell on pound, and the same thing on euro. Okay, which is what actually happened. You can see retest sell and send the next trade retest sell. Okay, and you can see that all the same things that we actually send actually come to pass. Okay, which I sent another trade on Monday from this daily fair value gap that you can see. We had SMT, smart money reversal, and now we wanted to trade the sell side of the curve. I told members if we take out this high, we look for sells. Okay, and you can see the same thing that happened. Okay, after we took out this high over here. Okay, you can see we took out that high into that fair value gap, sold. Okay, so we send all these things. I send all these things to the community. Okay, if you look at JPY pairs as well, all right, same thing. Okay, I send all my analysis on time. Okay, and all this we always have something else, which is we have this section on WAP where we upload all our live streams. Okay, so in case you decide to join us, all these sessions that we have are always recorded. Okay, so something else, we are having recorded classes that are actually coming, which will make this a self-study mentorship. So if you join, you'll have all these things to study by yourself. Okay, so we have this PDF, all right, that I created myself that has a lot of information. Okay, so I'm having this recorded as video classes from liquidity to the model to everything that I have actually talked about on the weekly outlook video. So which will make this self-study. So that plus the live sessions that we have, plus the recordings that we actually have, I believe will be value for money. So currently it's going for $100, but soon after all this is done and the groundwork is actually laid, I believe the prices will also go up. So if you want to work directly with me, just let me know. The link will actually be on bio, but in case you feel like you still want to see how I actually teach or how we actually trade, you can also join the free community. Link will be on bio. And I believe there's still a lot of learning to learn over there, which I actually still teach and throw around for free in free live streams. And yeah, if you believe this is actually helpful or you learned a lot, please consider liking, subscribing, and sharing. Okay, and I'll see you on the other side.